First, it's important to remember that tax is secondary in the financial planning process. So the first thing from an investment standpoint is to make sure that your investments are appropriate for you, that reflect your attitude to risk, your appetite for risk. And the best way to do that is to have that discussion with your financial advisor. But then making sure that those investments are structured in the most tax efficient way is really important, can add real value by just the small extra percentages that you can make by doing things tax efficiently. For most individuals, the taxes that will most pressingly concern them, well, the tax that will most pressingly concern them will be income tax. If you have investments, which hopefully you do, then you'll be thinking about capital gains tax, or at least you should. And if you own anything, then at some point you'll be thinking about inheritance tax. So being aware of what the main simple allowances and exemptions are in relation to all of those taxes will be really important to take into account and factor into your planning process. For example, for income tax, making sure that you make most use of your personal allowances. And if you're a couple, remember both of you have those allowances. Your personal savings allowance for interest of £1,000 of tax-free interest a year, or £500 if you're a higher rate taxpayer. Remember, for dividends, you can receive £2,000 of dividends every year, completely free of tax. That's each of a couple. And then you've got capital gains tax with the exemption of £12,000 of capital gains to be made every year, which can have a tremendous impact over time. For inheritance tax, £3,000 a year can be given away. So these are really, really simple examples of just being aware of what those exemptions are. Once you've understood the fundamentals, you can then come to your financial planner, I think, better prepared to have a better discussion and a better understanding of then how those exemptions and allowances, and bear in mind I've only really talked about the most basic of exemptions and allowances. There are many more that you should consider dependent on the assets that you own and the income that you receive. But with your financial planner then, and that's where the essence of financial planning comes in, is you're applying those allowances to your situation and seeing to what extent you can use them for your benefit. So it's then taking the theory into the practice, and that's where financial advice is so important.